Hey everyone, thanks for joining us on this week's Success Tax Podcast. I'm Eric Green. I will be joined by Tony Carter, my partner on the show, as well as Dawn Brolin. Now, Dawn is a CPA and forensic accountant, and what she and I have seen and what we're going to cover is all of the mistakes that entrepreneurs make when trying to deal with an accountant, get an accountant, the way they view an accountant, and frankly, how they utilize their accountant, because the accountant should be one of your greatest assets. We're also going to get into what to look for if you don't have an accountant or you're not happy, what to look for when you select a tax professional to help you. So, with all that said, let's get into the show. All right, Dawn Brolin. I think everyone knows Tony Carter by now. Dawn, so first of all, everyone, I've known Dawn for like 20 years, but for everyone who doesn't know you, how did Dawn get here?
How did Dawn get here? Wow, that's quite a
story. Beyond the traffic this morning, how did Dawn get
here?
Fair,
yes. I did not have a helicopter yet. I'm working on that, but in the meantime...
Would that be deductible?
Yeah, well, we'll talk about that. It depends. That's my favorite answer when it comes to is a deductible.
Yes.
So I've been working in accounting since 1999. I knew when I was 16 I wanted to be an accountant because it made sense, which... As an athlete, everybody thinks you're going to be a gym teacher, which no knock on them. I love them. I love floor hockey.
My dad was a gym teacher.
And I love that. I mean, that was my favorite class, except for accounting. And so I started to build my business, was a bookkeeper for a long time, joined in another partnership, learned a lot from that. That's where I met you.
Yep.
And really, I just really enjoy working with clients. I enjoy helping businesses grow their business, understand their numbers, take every single tax deduction that they're allowed to. We're not going to go over that gray line, but, just really have a passion around helping people improve their business. Working with you, especially a lot of the things that we do as we find them in trouble. So we come in, we're like the ambulance, we're the tax ambulance. We come in, we try to help them through their goods and bads and uglies. And so right now, I'm Powerful Accounting Inc. I'm the CEO there. I'm a certified public accountant and a certified fraud examiner, a staff of 3, which is plenty. Did grow to a staff of 11, horrifying. And so, now with a smaller firm, we're able to service people, I think, on a more personal level and really be able to dive into their numbers, figure out what's working, what's not working, and help them make educated decisions in their business, not just guessing.
Right, and we've seen it all. It's funny how I've met both of you. So I met Dawn. We are at a dinner. It was one of these joint dinner accounting attorney dinners. And the way I met Tony, actually, in one of his ventures, he was looking to acquire assets out of a bankruptcy, got referred to Jeff Sklarz and I, our partner, and thankfully came to the conclusion, don't do this, and that's a podcast unto its own. But that actually worked out for the best. But we both have had this experience of starting businesses. You and I have seen a lot of succeed and a lot fail. And one of the biggest issues, it's funny, because Tony and I were talking about this, is the need for numbers. I mean, whether it's cash flow, and starting off, capitalized or undercapitalized. But so many folks, and Tony, I'd like to hear your take because you've started a number of businesses. It strikes me that most people view the accountant as like a necessary evil. I'll deal with it at tax time, right? I don't want to pay them a lot of money because they're focused on I got to open up, I got inventory, I got this, and then I have the accountant. I can keep my own books.
Terrible idea.
Yeah, no, bad. Unless you're an accountant by training, bad idea. And even if you are, maybe you'll do some of your own bookkeeping. You still want a tax pro to come in and help you. And so, of the mistakes that we make, again, what I'd like to talk about, one, why people need an accountant. I mean, what is the accountant bringing to the table? And by the way, if your accountant's not bringing this to the table, it's because of the way you deal with them. All right, so I'm going to put that on the entrepreneur. One is, of course, what does the accountant bring to the table? What are the biggest mistakes we've all seen? And then I think, Tony and I were talking about this. Tony said, well, what do you think you want to look for in an accountant? And so I think let's try to hit on all of those. biggest mistake number one is not having an accountant.
Absolutely.
Right? First of all, and I would like you to comment on all of this. One, it's going to cost you more in the long run. You don't think it is, but it is. And two, what should the accountant be giving the entrepreneur?
Yeah, I think my biggest thing, especially now more than ever, is that you should build a relationship with an accountant. This shouldn't be something where, oh, we'll do my books and do all this so we can prepare a tax return. Okay, anybody can prepare, I say anybody, respectfully, but anyone can prepare a tax return. The tax return is the result of what happened in the prior year. Yep. It is not something that helps you build and plan for your business and all those types of things. You should have a relationship, and what does that mean? What that means is when you're starting to make a financial decision on your business, you should be calling your accountant. You shouldn't be in September, October, and go, I think I made a lot of money this year, I'm gonna go buy a crane. Yeah. Right? So we find a lot, because March, it's too late. It's just too late. I can't help you there. That's not really helping you be successful. There's a decision-making process. Most entrepreneurs don't necessarily have the funds or the ability to hire someone full-time to not just manage the books, but also do planning. And, you're going to talk about $150,000 salary minimum for somebody who's actually functional and capable of helping you make real decisions on your business. And so for Powerful Accounting, the approach we've made, and we've really made some transitions in the last 2 to 3 years, is listen, most accountants are working with too many people. A lot of them, even the smaller firms, larger firms, they're tax houses. They're not the, cross-country people that that do tax returns and they're in the Walmart, for instance. Those types of mentalities and those firm structures are not going to be successful long-term, in my opinion. Okay. I think the less clients that you work with, the more time you have when the entrepreneur says, Dawn, I have a question. Can you talk to me? Most entrepreneurs, I think, are afraid, like you said in the beginning, the entrepreneur thinks it's an expense to call. I'm going to call Dawn. She's going to send me a bill. Right. And I understand that. I get that fear of, I don't have a lot of cash flow. I'm afraid to call her because she's going to send me a $2,000 bill for the 3-hour meeting we had, for example, whatever. When you build a relationship with an accountant who sets you up, in my opinion, subscription pricing, I call it relationship pricing, where, Eric, you got a question, I don't care when it is, what time of year, I don't care if you call me 100 times a month or 1 time a month, it's going to be the same fee. You know why? I want to build a relationship with you, the entrepreneur, to help you succeed and move through the process. So you got to have that team member. That's an extension of your team.
Yeah. No, and to follow up on that, so first of all, just for the record, and I have no problem saying this myself, accountants, by and large, are terrible entrepreneurs themselves. Dawn and I have actually done a program on my other podcast, Tax Rep Network, about how they can be more entrepreneurial, exactly creating relationship. Because if you're an accountant, isn't this the work you want to do? I like the consulting. I like the planning. Who the hell wants to sit and bang out 1040s afterward? The other thing, in terms of cost, I agree with you. The idea is, Dawn, I have to work with Dawn. It's $1,500 a month. It's $2,000 a month. $25,000. Except, I actually have numbers on a real-time basis. I'm making actual decisions that will impact the return. When you come in after tax season, and I give stuff to the accountant, I'm getting a postmortem. It's all done. I could put it into an IRA or whatever. The bottom line is, there's nothing they can do at that point to help me. Whatever's done is done. They're just going to report back. The goal here is, Tony and I are thinking about investing in a studio, and we're thinking, what do you think? And Dawn could say, well, first of all, we have to do a cost segregation study on this. How much can we write off, get your money back faster? All right, what can we depreciate where? What are you looking at in terms of cost? Are you going to finance this? Sometimes financing works out better. Keep your money in the bank because there's other money other places to invest in. Those are the real-time decisions that you need to make, and I don't understand how you make them if you don't have real numbers.
I like your idea about having the relationship and seeing that accountant or bookkeeper as part of the team, keeping them apprised of what's going on, and then also accessibility, right? Because especially when you're new to business, you just don't know. You have questions. And so you need to make sure that you have someone that is readily accessible and not get offended or upset by that.
Exactly. We just picked up a new client last week, and you and I spoke a little bit about it on the phone. And I went in there and we're just sitting down looking at some basic things. I'm like, all right, well, give me last year's returns. Let me look at your books. I want to see what the difference is between the two, because 99% of the time there are differences between what the entrepreneur has in the books and what hits the tax return. But the accountant is pumping, and I get it. You're pumping out a tax return. You got 70 behind you. You're trying to get done. And you're like, oh, adjusting entries, we'll deal with that later. And then they're never dealt with. Right. Because after tax season's over, everybody goes on vacation. Nobody cares anymore at all. So the disservice of that type of work is so significant to a business owner, where they're trying to make decisions. Now, I look at the bill. This is one of my favorite things. I love looking at other accountants' invoices, not because I want to upcharge somebody or down. It doesn't matter. I don't really care what the other accountant charged. It's irrelevant to me. My prices are my price. But I look at that because I want to see, when the client is complaining to me, you know, I call them, they never call me back. I look at this and I ask them for questions. They never give me the adjusting entries, blah, blah, blah. And I hold up the invoice. I go, do you see what you paid them? You paid them $800 for a partnership tax return. I wouldn't call you back either. But at the same time, like you said, the accountants are not great entrepreneurs, right? They don't understand what we do. Here's what they do. They make a lot of assumptions. They're assuming that the entrepreneur doesn't want to pay for it. The entrepreneur doesn't know they should.
Right.
So we as that advisor should be saying, hey, listen, we need to build a relationship here. It isn't going to cost you $800 a year. It's going to be quite a bit more than that. But, and then I love this question. Well, can you save me the same amount in taxes as your fees? There's no way I can promise you that. Let me explain to you why. I don't run your business. I advise you on your business, but I don't run it for you. So when you make decisions without me, it affects the consequence. Right. You can't hold me to that. Do I think I can save you money in taxes? Yes, because I can see already by just looking at your tax return, you didn't take advantage of the pass-through entity tax, simple example. So knowing that the pass-through entity tax can affect the federal part of your taxes. So that one simple little thing, I might save them $2,000 on that right from the beginning. But I'm not going to accumulate that, see, because I'm not going to save you money. I wanted you to grow your business so you pay more in tax. Now, people hate when I say that. If you're paying, my tax partner and I laugh, you pay hundreds of thousands in taxes, you're making millions and millions of dollars. Are you okay with that? Yeah. Well, yeah, I'd be okay with that. All right, well, we got to start somewhere.
Right. No, and it's the interesting thing also, the other savings in this. We have seen, we have one now. It is a contractor, successful by every stretch, used his QuickBooks. He wanted to save money. He did his own QuickBooks, handed it to the accountant, assuming the accountant will go through and clean up. Accountant took his QuickBooks, put it on the return, charged him $550 for his Schedule C. Okay. What happened? He got audited because he was using QuickBooks to do estimates. So homeowner, $10,000. We're going to do the fence. We'll do the porch or whatever. You know, we're not. My wife and I are going to put off the porch. We're just going to do the fence. All right, it's $6,000. What he would do is go into QuickBooks, delete $10,000, $6,000, send it, and of course he would get paid $6,000 when it was done. When he got audited, here's what the IRS saw: you charged $10,000, you pocketed $4,000 in cash, and then you deleted that, and now $6,000. So basically, they said, you're committing fraud. We got the proof right here. They referred him to criminal investigation. Now he's hired tax lawyers. I'm sorry to tell you, we're $25,000 out of the gate as a retainer, because I got to bring in Dawn to forensically reconstruct what the hell happened. Ultimately, we managed to convince CI basically he was not a thief. He's an idiot. And, it
is what it is.
It is what it is. And they agreed, and they referred it back to civil. Just so you know, civil doesn't say, oh, yeah, I guess we were wrong. Oh, I'm glad it all worked out for your client. They were like, screw that. They hit him for the tax, 75% civil fraud penalty and interest. Now, ultimately, we did get it corrected, but out of this, they found every single mistake he had made. He still ended up over a 3-year period and we got the penalties waived, still paying $110,000 tax and interest. So net, when you're working with an accountant properly and you're on top of stuff and all of that, here's the other thing. And I'll tell you from our thing at Green and Sklar's, I don't care about an audit. Let them come audit me. Knock yourself out, you know? Look, what are they going to? Are they going to argue with me about the lunch I took Tony to? Is it really business? Okay, nickels and dimes. That's what they're going to find. There's nothing there. Why? We're on top of our. We have to be. We're on top of our numbers. All right. So first of all, I don't worry about an audit, and I certainly don't worry about criminal. Like whatever, that stuff doesn't bother me. We're on top of our numbers every month. So at year end, we do real year end planning. On that note, by the way, if you have an accountant and your accountant ever tells you, go find more deductions, fire your accountant. This is the most idiotic. So we get people in tax problems. You bought $100,000 of equipment the end of the year. Why? My accountant said to go find deductions. I'm like, all right, wait a minute, back up. Your accountant told you to go spend $100,000 to save $30,000. Now listen, if you need equipment, buy it in December, take the deduction this year. It makes perfect sense.
Absolutely.
If you need equipment. So I told him, I said, listen, I'm going to make you a deal. This year, when you need deductions, send me $100,000. I'm going to give you $50,000 back. And he looked at me and said, I'm being stupid, aren't I? I said, what is your accountant thinking? All right? So that's an aside. That's my soapbox for the day. But no, so working with an accountant is critical. So savings. So what does the accountant get you? One, we're agreed, you're on top of your numbers. Two, the return is just a report card afterward, and we can sleep at night, right? Because we know our numbers are solid. The other thing, though, and I'm sure you've done this, I've done this, we go to sit with the banker. We need an SBA loan. We want, if you're doing well enough, I'm going to meet with the VCs, venture capitalists, right? Which is a program we're going to be doing, bring in some private equity people talking about what they look for. First thing out of the gate, out of their mouth, give us the numbers. We want to see your historical numbers. Because they want to see where this business is going, where you're spending your money. Because what they're trying to evaluate is what are the prospects of this business. Do you know how many people call us? They want us helping with a bank, and I say, send us your numbers. I'm happy to look at them. I have partners that really do this, and they say, I don't know. I mean, I have a 23 return. Well, what about your 24 numbers? Well, I don't have those yet. What do you mean you don't have them yet? That's frightening. How are you making any decisions whatsoever?
Well, and that's part of the problem, and Tony, especially, being entrepreneur-minded, you want to think of the end game before, you want to think about succession planning. Think about what do you want to do with your business, right? So you're like, oh, I got in business, I've got this great HVAC company, and I'm growing, and things are great, and money's flowing. I think, at least I get paid every week. I'm pretty sure I have money, that kind of thought process. But, well, I don't want to pay taxes. I love real estate people who own rental properties. These guys are the best. In that being sarcastic. So these folks are like, okay.
We're talking about real estate.
I know. Well, you're an exception, Tony. You're very different. In so many ways, we don't have time for that. But if you think about it, a lot of the real estate people, and we have some, I've had a lot come and go, because they don't want to have real books. Now, if you're a real estate guy and you have a home and you're ready to sell this property, and I say, Tony, let's take a look at the last 3 years' tax returns. Let me see your balance sheet. Let's see what improvements you've done. Let me see all of these types of things that you've done. And they don't have books, number one. Most of them, I would say the majority of rental property, real estate people don't have books. That's fair. Especially in a small, anybody that's got like maybe 1 to 10 properties. They're just like flying by the seat of their pants. Right. And they're like collecting, then they don't report all the cash. They put cash in their pocket. They're not doing gross rents. They don't have all their leases, I's dotted, T's crossed. So when you're like, okay, I've got this property and it's appraised and all this other stuff, but they look, well, what's your profit? Like, am I going to make money or am I going to keep putting money into this Like, where are we at? And you look and you ask them those questions. They have none of those answers because why? Their ultimate goal with the rental property is to not pay taxes. That's all they care about. I'm going to keep the money. I don't want to pay the government. and you're like, okay, well, now you're ready to sell the property, and now you're going to get half, if you're lucky, of what you ultimately wanted for the property, because you can't show a profit after 10 years. Right? So talk a little bit about that, like from your mentality as a real estate guy. Like, how do you, because I think any entrepreneur that's out there today who has 1, 5, 20 rental properties, like, that's really important advice. And again, it falls to any kind of industry, but I think that's a great example of how they think in just an opposite way.
Very much so. Now, I'm thinking about our business. Thank God for my partner, because he is anal retentive. Like, he does not miss anything. We get our monthly reports, our quarterly reports. He is very particular about keeping accurate records with regard to rent rolls, right? Because when you're trying to refi properties, the very first thing they want to see, right, is your bank statements. Then they want to see the leases, and to make sure those things kind of match up the way they're supposed to. So I agree with you 100%. I would say right off the bat, you need to have a bookkeeper, right? If you're 1 to 10 properties or 1 to 25 properties, it's insane to think that you're going to be able to keep up as an operator of that business, and then also be the accountant or the bookkeeper part of it. It's just it's a fatal flaw, right? In an entrepreneur's thinking, particularly when you're new.
And how many things, if you don't have a bookkeeper or whatever, you're talking about paying for yourself, how many expenses do you think get missed? Because you're flying by your seat of your pants.
A ton of them.
Versus if here's the difference, you're running it like a real business. Okay? How many businesses have we seen fail because they're undercapitalized? Again, an actual story, restaurant, high-end Italian restaurants opening up in the town where I used to practice. I was with a firm, and for months they're doing build-out. And I remember thinking, they're sinking a lot of money into this. They opened up, 4 months later, gone, out of business. Another restaurant came in, switched the sign, all the build-out was done, and just took it right over. And I was talking with my former partner, Bob Percy, since passed away. Bob, at the time, said to me, he said, you know what their problem is? He said they figured out how much to get open. They're paying rent while they're doing this build-out. He said they figured out how much to buy their inventory, whatever. What they did not factor in is how they're going to live for a year, because you're not taking a dime out. Not for a year. Every dime you make, first of all, you're not selling all your inventory. You're not going to open your doors and have a line out the door. Not going to happen. You're not going to sell your inventory, so much going to get dumped. You got to pay your wages. You better pay your sales tax or your withholding tax, and you're out of business in 10 seconds. He said they did not factor in, if I can't take a dime for a year, how do I live? He said, I bet they probably had $200,000 open, and they needed $400,000. He said, undercapitalization is why 80% of businesses fail. I think he's right, maybe even higher. An accountant will help you, they should, be able to help you, when you give them your business plan, and they're like, oh, okay, and how are you paying your withholding tax? And remember the old McDonald's commercial? Kid gets his first paycheck. It's one of my favorite commercials. And he's like, "Who's FICA and who said he could take my money?" These employees. Oh yeah, I'm going to pay him $15 an hour. Well, that $15 is $20.
Yeah.
Because you got to match the FICA. You got the unemployment. You got workman's comp. You're going to have. So most often people start off and all their numbers are wrong. Any good accountant could have sat there and said, well, okay, time out, chief. Let's remodel this. And I've had this where people come in and she wanted to quit her executive job because she made like these glass, they're like little glass cats and dogs, like what we would call tchotchkes, right? and I said, how much can you sell them for? $7. I said, how many could you make if you worked full time at this? She said about 2,000 of them. I said, you sell all 2,000 of them. $14,000. I said, by the way, you got to pay sales tax. I said, are you getting a helper or are you doing this full time yourself? She said, well, I was going to hire somebody. Okay, let's start. Basically, they'd have to put $20,000 in. She's not making a dime. I said, you'd have to do this on an industrial scale to make any money. She said, I don't think I'm going to quit my job. I said, no, I think this is a hobby. This is a hobby. This is the kind of thing you do when you're 70, right?
Or this is a Saturday morning, instead of doing a puzzle, you
Yeah.
make those little things, right?
Right.
Type of thing. I wanted to take what you said a step further, because I really appreciate what you're saying about, listen, even if it's one property or it's 10 or 25, you should have a bookkeeper.
Yes.
Now, what I also think is super important is that the bookkeeper has a connection to a CPA. Tax preparer. I don't care if you're an EA, I don't care what you are, it doesn't matter. Someone who's qualified to do a tax return, why? Or somebody that also really understands accounting. There are bookkeepers that they do the best they can, right? A lot of times it's one of the spouses of the business who's handling the books. Great. Guess what? That person, don't leave them out to dry. Oh, no. Those people need a support system. That bookkeeper, okay, I got a bookkeeper. I'm all set. I'm not worried about that. How often is your bookkeeper talking to your tax preparer or your advisor, or whoever that person is? That is probably one of the things. I feel so bad for that bookkeeper who, they can't take it necessarily to the finish line from a tax return. And there's a ton of really good bookkeepers out there. But wouldn't you think connecting that bookkeeper and letting them have, a shoulder to lean on, if you will, even to advise them and help them move forward, help educate them, get them even to be better than they were before. Like, there's a combination there that I think is important. So I don't want it to stop at the bookkeeper level. I want it to be, that relationship has got to be between at least two people, someone within the organization. And I get it. There's a lot of business owners who are, my bookkeeper handles all that. Well, I'll tell you what, I'm a certified fraud examiner. You know how many times I have seen a son steal from a father.
First of all, it's always the bookkeeper.
Poor thing.
Well, so no, I mean,
Are we picking on bookkeepers now?
I know, right?
No. If there's fraud, it's always been because what happens is, I'm running around. I'm too busy. You're too busy. You're out with the properties. You're out doing deals. Bookkeeper's got it. You know what? She can sign the checks and send them out. Our law firm, we have a controller. We have an outside accounting firm. Only Jeff and I have signature authority. Period. And you know what? During COVID, one of us had to take turns going into the office to sign. The controller would go in while we were not there, prepare the checks, leave them. One of us would go in, review, sign. It's a pain in the neck, but you know what? It's our business. It's our money. Everything. There's a book out, Extreme Ownership, by Jocko Willink. Jeff and I read it, and we're like, yeah, we don't have a problem with ownership. We own everything, right? It's our soup to nuts, and so we take care of it. That's what happens, though. The fraud cases where we've come in, the bookkeeper was stealing, and it started with they needed something they were going to borrow. They'll put it back, and it almost like it becomes a habit. They like the extra money, and before you know it, $150,000, $200,000 later, and often it comes up when you go to sell the business because the incoming business comes in to audit. Mm-hmm. I want to see all the books. We had one where it was. I won't identify what he was. He was a salesman, and he had a bookkeeper for years. Loved his bookkeeper. Sells the business to another salesperson. CPA reviews the QuickBooks, reviews everything, and says, "I need the bank statements." She won't turn over the bank statements. Weeks go by, months. Finally, the owner, the new the purchaser called the seller, who's now down in Florida, right? Checked out, gone. Yep, and says, "Why won't she turn over the bank statements?" He said, "Want me to call her?" He said, "No, you know what? Can you just get us the statements?" I think they already had an inkling. He said, "Yeah, I'll go over to, in Miami, I'll go over to Bank of America now, I'll get them." Got the statements electronically, uploaded them. Within 5 minutes, the CPA found the fraud. All of the entries for Department of Labor and U.S. Treasury were all made out to her in reality. She stole $198,000. So he flew up, the seller. So now she comes in one morning, the buyer's there, seller's there, CPA's there, and they had a labor attorney. They confront her. She admits it, unlocks her drawer, and hands them stacks of letters from the government.
Oh.
And we ended up going to criminal investigation for a number of reasons. But the client really was beside him. She said, "I trusted her." We had this long, and by the way, she didn't even need the money. She sold and bought a larger house. She got a sports car. It was lifestyle. But
Well, and the thing about that too is I think in today's day, let's just be real, not a lot of people have time to sign checks. Let's just address that, right? So there may be some entrepreneurs who are listening now who are saying, I don't have time to come in. I don't want to be signing checks, right? And we see a lot of them with stamps. We do all those things. So
well, today with technology,
Yes.
My last thought on this is the reason we went to criminal investigation, when they show up, revenue officers vanish, because I was telling the client, you're on the hook for this. The fact that she stole the money does not, just for entrepreneurs, if you have an employee steal the payroll money and the sales tax money, you're not off the hook. You are responsible for that. You cannot go bankrupt on it. It's a collected tax. And so I told them, we're going to bring in CI. They're going to take years. It's just the way that they work. After 3 years, they can't assess you anymore. So every year he'd get pissed off, probably because his wife gave it to him. She was like, how stupid are you that you let this happen? He would call me. You got to get CI to hurry up and do something. I'm like, do you really want me to rush them? If they drop this case, you show it within the 3 years. He'd say, oh yeah, you know what? Never mind. Let them take their time. All right? By the time they brought the case, you got prison time, order of restitution. 3 years had come and gone. They never assessed him for the trust fund. So he retired. I mean, he's out the money, obviously, but the government's out the money. But no, but today, it used to be like we would come in and sign checks.
Sure.
But there's now solutions for this that you can just take care of it online.
Well, yeah, and let's address the payroll issue, which is fiduciary taxes that you're responsible for no matter what.
Right.
There is absolutely zero. Let's go with zero. I very rarely go with zero, and I very rarely say never. Those are always and never are not things you typically say. There are payroll services out there that collect the tax and pay the tax. If you don't collect or pay the tax, or let's just say they can't get the money out of your bank account and you bounce the payroll, You're cut off. Like, you're done. So when you don't get your paycheck or your employees don't get their paycheck, they're screaming and hollering, there's a problem really quick.
Yep.
It's the problem where, because again, the entrepreneur just doesn't have the time to deal with that. And I get that. I'm a business owner too. I don't do my own books and I don't do my own taxes, and I'm an accountant. Why? Because I need to make sure that they're done properly. It's just like the shoesmith. The kids have no shoes. I get all of that. So I don't want to be responsible for that. So I just look at that fiduciary tax is avoidable, in my opinion, because of these full service payroll companies that can handle it. And so that happens earlier. But the accounts payable.
And by the way, this often starts where the new bookkeeper says, I'll take over the payroll. We can save that money. Yeah, no, you know what? Pay ADP or Paychecks or whoever. You know what? First of all, it's not that much money. And you know what? It's a check. Mm-hmm. It's like balancing checks. It's something to make sure that things are being done properly, especially with that money.
Yeah, and I always say that just like an accountant is the extension of your business, like we're part of your team. You should have a lawyer, you should have an accountant. Not that you're paying them all on retainers all the time, but just have that person in whatever capacity that looks like. And that's the beauty about payroll, is having that. That's an addition. You have a payroll, basically a payroll department when you have an outsourced payroll company. That's what they're there for. That's one thing. That's on the payroll side. But from the accounts payable side, there are so many amazing apps out there. There's Quadient, Bill, there's Corpay, there's Dext is another one that's coming on. Like, there's all these apps where the bill can get scanned and it can go through a technological approval process. So if you have a bookkeeper, the invoice goes into one of these apps and it gets populated. Great. Now we have record of it in the event of an audit. We now have our receipts. That's crazy. I know I'm getting crazy now. Mm-hmm. You'd actually have copies of invoices and receipts that are not on the floor of your truck with coffee and eggs all over it. That's a whole nother thing. Just snap a picture. I have a funny story about that. I love to do a little sidebar. I have an electrician. I'm like, dude, you got to use this software called Dext. You just take a picture of the receipt. Now we don't ask you as many questions because we know what you bought. He's like, nah, I'm not really into technology. I'm not that guy. And I go, really? All right, that's cool. And we talk about a couple other things. Now it's still here in my head. And I go, Danny, oh my goodness, is your daughter 6? Is she 6 now or 6 months old? Oh my goodness, give me a picture. He pulls his phone out. He's all proud, Daddy. Look at my daughter. I'm like, oh my God, she's so cute. And I looked at him, I stopped for a minute and I go, so you can take a picture? And he's like, oh man, you got me. I'm like, all I need you to do is take a picture, bro. That's it. So with that, that data collection is amazing. But not only that, there are approval processes. You take a picture of an invoice, it's now part of your accounts payable. Now the bookkeeper manages that. Now you're I'm going to tell you this right now, I'm going to protect the bookkeeper. Let's set them up for success. How do we do that? We set systems and internal controls to help them be successful. That invoice gets a picture, they maybe go in and code it, whatever they want to do, pushes it automatically into QuickBooks. Nobody's in QuickBooks at this point. Then she says, okay, Tony, this invoice is ready to be paid. I just need you to approve it. Now, all you do on your phone as you're stopping for a coffee, you're like, oh, there's 3 bills for me to approve. And I can look at the bill on my phone. So I'm not just blindly agreeing to pay a bill that's fraudulent, which is one of the ways they do it. I say they, meaning people who are fraudulent. So you're able to look at that with an educated mind saying, oh yeah, we just had this plumber go over that property and fix that bathroom. Yep, no problem, let's get him paid. Now, the second thing that happens with that maybe the third thing that happens with that process is no one is signing checks. Now, you may choose to have it electronically dropped right into that vendor's account. Vendors love that. I love direct deposit. I love you just push the money into my account, right? Mm-hmm. Yes, there's remote deposit with checks. There's trouble with that, but that's a whole other thing. But these companies who are handling this accounts payable and bill payment will actually mail a check for you. What's great about that? It's not your routing and account number. So people are still check washing. They're intercepting checks in the mail, you're routing an account number at the bottom, and they're stealing money out of people's accounts, and people aren't paying attention. When do you find out? Some of you never, because you never look at your bank statements, and you never really do books. So those types of things as an entrepreneur are critical to thinking through. Now, where do you get this information, Eric? You get this information from your accountant.
Right.
Those are the people who they should know technology, internal controls, and systems, simple stuff. We're not talking corporate. We're talking simple, smaller entrepreneur. Listen, can you take a picture? We can use this system. Here are the books. Talk to your accountant on a regular basis, if not monthly. Some people we talk to weekly, some monthly, some quarterly, but talk to them and help them understand you want a relationship with them. They don't know that.
And it's all on your phone. QuickBooks, Melio, Dext, any of these. Lisio, it's an app on the phone. Mm-hmm. I take out my phone, I take the picture, I can approve everything. And trust me, if people are like, oh, I'm not into technology, they're walking around with a smartphone. Everyone is.
Not many dumb phones out there.
No.
I think most of the dumb flip phones are gone. I have a friend of mine who has now a smartphone.
You know what carries them? Orthodox. In the Orthodox Jewish community, because they, for a whole host of reasons, don't want to be connected to the internet and everything that the internet holds.
I respect that.
Except for the entrepreneurs. They will literally have a smartphone and the dumb phone, and the smartphone will get turned off when business is over, supposedly. I know because I've got clients that's what they do, because they have to deal. They sell on Amazon.
Yeah.
You can't deal with Amazon on a dumb phone. You need your smartphone. You need to get into your account. But the point is, any of this stuff, if you're sitting there listening to this going, I can't even wrap my head around, don't worry about it. I mean, this is part of what you do.
Yeah.
I mean, some of the consulting you do. It's critical, which is going to dovetail into what we were talking about before. How do you select an accountant?
That's the question. How do you do it?
Yeah, so I think for myself, number one, you have to change your mindset. The accountant is not an expense to your business. The accountant is an investment. It's a direct extension to your success, in my opinion. To do it, go to accountant for a tax return. We always talk about the shoebox and entrepreneur. They just show up with a shoebox, some statements, and they're like, figure it out, right? I don't believe that's somebody who's building a business. If you're a serious entrepreneur and you want to build a business, when you're trying to pick an accountant, number one, do they answer you? Okay, well, let's get to the root of that. Well, if you're not paying them, they're probably not. First of all the accountant has, we have one thing, a brain, right? We have a brain. We sell our brain, right? I can't build a house. Although I've done some construction. I can get on a roof. Don't you worry. Don't you need some help? I can even strip a roof all by myself. Don't you worry. So
he's like, I hire people to do that. No, you can go up there and do it.
I can go do it. I know how to do that. So, but at the end of the day, that's what we're selling. We're selling our experience, our knowledge, our education, all of those things that we've had. That's what we're selling to you. The way we can help you grow and build your business. So if you go to an accountant and they're like, well, we just do taxes. Okay, well, that's a tax accountant. That's not somebody who's helping entrepreneurs build a business. So you have to figure out, hey, listen, I'm going to interview you, Eric. So you're an accountant and I'm looking for an accountant. I need ongoing help, ongoing support. How do you operate? So the accountant's going to answer you, well, we have a bookkeeping support and we charge you by the hour. So it's, $100 an hour, whatever it may be. And if you want to talk to me and get on a phone call, it's $500 an hour. And, we'll just invoice you as we go. To me, that's not ideal. To me, it's, hey, listen, Tony, I see all your entities. I see what's going on here. You've got a full-time bookkeeper. Awesome. We're going to want to check the books every month, maybe every quarter, depends on the needs of the client, and we'll evaluate that. You want to find an accountant who is willing to communicate with you often. I have one client who said, we started this relationship pricing a few years ago, and it's been life-changing for myself and life-changing for the client. And I said, here's what we're doing. I'm not going to send you invoices. I'm not billing you for the tax return. I'm not doing any of that. I actually don't even want to do my own accounting. I don't want to deal with accounts receivable. I don't want to worry about billing you by the hour because you're not going to call me if I'm going to bill you. Tell you what,
right.
Going to charge you $750 a month. That's $9,000 a year. Use me as you may. Going to do your tax return, oversee your books. We're going to meet periodically. You call me whenever you want. Some accountants will say, well, what if they call me like 40 times a month? So they're not, number one. They're not. They don't really want to talk to you anyway. But now when I call them, they're like, hey, Dawn needs something. Let me talk to her. They're not thinking tick tock, tick tock. They're not thinking about how long are they spending with me time-wise. They're like, hey, I'm just paying her a flat fee. She's going to handle everything. I'll even work with and say so you're looking for an accountant. You want somebody who's going to help you. If you're a partnership, do you have a buy-sell agreement? What is that? Well, let's get you to an attorney. Now, I don't do them. I bring them to the attorney. I didn't even know I needed that. And I have this one company that I work with. We always kill off Mark. So you have two partners, Mark, we got Cody, and Mark's married. Cody's not married. So we kill Mark all the time. So I'm like, Cody, you don't want to work with his wife. If he dies, what are you going to do? I don't know. I go, well, right now, she's going to be part of your business because you don't have an agreement. And she's going to come in here and nose around all over the place, or vice versa. Two women, husband's going to come in, whatever. You need a buy-sell agreement. You want to find an accountant who's going to help you think for yourself and think out loud. And the funny thing is, as may not be great entrepreneurs, we're awesome at being an entrepreneur for you. Less for us, we're always thinking for you. What is the next thing you should do? So when you're looking for an accountant, you're not looking just for someone who does tax returns. You're also not looking for someone that's just going to reconcile your books and do your tax return at year end. And that's the majority, and that's the history of the way accountants have always worked with people. That's how we've always done it. That's not the mindset shouldn't be that. And I think the industry is shifting at this point where accountants are starting to grab onto that. And from the accountants, if you're an accountant, I'm thinking, listen, shrink your client base. Get yourself this solid book of business that pays you every single month for the things that you're doing. You're going to find you're going to work with less clients. You're going to make the same, if not more money, but you're providing better service. You're getting back to people. And I had a client who said, so you're telling me, because they had another bookkeeping firm they were working, we were just doing their tax return. I said, we want to do it all. We don't want to do the bookkeeping. Keep the bookkeeping company. Don't get rid of them. But we're going to work with you, and if you have a question, we're going to answer it. He says, are you serious? I said, yeah. He goes, because I emailed the bookkeeper, and I'm like, I don't know where to put this transaction. Can you help me? And they don't answer me. I said, we will answer you within 24 hours unless there's exceptions, but we're going to get right back to you. And those people in relationship, we have to do other tax returns, just tax work, and mostly individuals. We don't really work with a lot of businesses unless they're full boat relationship pricing. We won't work. Go to H&R Block. I'm sorry. Just go to get a tax preparer. It's not me. Right. I want to work with you to build your business.
You're not doing them any favors.
No favors.
Right. No, I mean you're setting them up. It's the wrong mindset. It's a small mindset.
And a lot of accountants, unfortunately, and I think that's changing. I think the accounting industry is understanding, first of all, with technology, our responsibilities and things we're going to do as we move forward in the upcoming years is going to change. Technology is not replacing us. It's changing the way we work. Everyone's like, the accountants are going to be replaced. No, they're not. It's just going to change.
So for the IRS rep conference that we run every year, In 2019, I had a panel of the CIOs of the 4 largest regional, not the big 4 accounting firms, the 4 largest regional firms that we have here. It was Markham, Citron Cooperman, Eisner Amper, and they merged. I think it was Bloom Shapiro. All of them said the same thing. They're automating the prep. They said that the issue we have now is we need our accountants to move to consultants. If you can make that shift to start advising and consulting, sky's the limit. If you can't, there is no future for you. We don't need people inputting.
Well, and people worry about that. They're like, well, what am I going to do? Well, you're going to interface with clients for the first time. We've been so busy in the accounting industry, and I don't like to be busy. Everyone's like, it's tax season, you're busy. Don't call me busy. Call me productive. I want to be productive in everything I do, so that my main focus is to advise the client to help them move forward. People are not going to, I know there's this virtual AI, all these things where you can talk to a computer person, right? They look like they're a person, they're talking to you. I've seen the technology. Yeah. That's not going to replace me having a conversation with Eric. The humans will still have to interact.
Not a strategic conversation.
Right.
Yeah, so it's funny. I think it was Scott Galloway, he's the NYU professor, was interviewed, and they asked him, what is the biggest threat from AI? He said, look, AI, if you do any kind of thinking, AI is not going to replace you. It's going to replace all the repetitive stuff.
Things it can learn, that it can redo.
He actually said the biggest threat from AI is actually loneliness. Some of these people who lock themselves away and they live on their phone, social media, that kind of stuff. But no, AI, from my perspective, can take, it helps you with getting my marketing stuff done and all that. It's not going to replace me. It's not going to tell my client how to resolve their case. There are too many moving parts, too many different factors to that. At least with the AI we have now is nowhere near that. Someday it might get there, but by then we'll all be in the Matrix. So I'm not worried about that.
I'll be definitely dead.
Yeah,
but
my kids will worry about
definitely. But I love that you say that, because really at the end of the day, if we talk about how the entrepreneur is already, they're busy or whatever, they're doing their thing. They're, fixing houses, they're going out making new deals, or doing all those things. If they don't have the time to even talk to their bookkeeper or deal with any of that stuff, you think they're going to go at home and sit down at their computer and go, oh, let me have a conversation with my computer. No, they're just not doing that. So it's that human interaction that's required and necessary. So you're right. The more the accountants can, and you're asking, what kind of accountant are you looking for? Look for someone that's forward thinking, somebody that understands that the industry is changing, that entrepreneurship is changing, that the way we do business is changing, and that they're adapting. So if your accountant calls you and says, hey, I want to move to this subscription pricing, relationship pricing, it's the same thing. But I like to build relationships. So if your accountant says that to you, embrace that. That means they're changing. And if they come to you, I'm changing the way I'm doing my billing. My approach was, I'm changing my business model. Run to that accountant. Run to that accountant. Call your accountant. And I'm not telling people, I want people to stay with their accountant. I want whoever it is that you have now, say, listen, I watched this awesome show, Eric Green, and he said, I should be building a relationship with you. And I want to do that. I want to be able to interact with you more. I want to be able to have these things that I believe I need to have. Tell me how much it would cost me to do that. And the accountant will go, I didn't think you'd want to pay for that. I would say that's probably half the time that's what the accountant's going to say. And as the entrepreneur, you need to say to yourself, I'm willing to pay for that.
No doubt about it.
You go to the accountant, you say that to them, and if they're like, yes, I'm embracing that, you stay with them.
Yep.
Because they do care about you. And they think about you more than you think, because we're people pleasers and we care about people. That's part of why we get in the industry. Give them a chance. Give them that chance to say, yes, I am ready to build a relationship with you, accountant. You're more valuable than I realized, and I'm ready to get going with you and get this done and make my business better and save as much taxes as I can, and to make this happen. You're going to find, I think, more accountants than not will be relieved that their clients want to move in this direction. So that's what I advise people. Go to your accountant and ask them. You don't need to be switching accountants. Unless they're like, nope, we're just going to keep doing it the way we do it, then you might want to run for the hills. That's on you. Do you know what I mean?
Yeah, no, absolutely. So just to wrap up, hopefully what you got out of this, you need an accountant. All right. So A. B. It's not just an expense. It's not just overhead. Right. They are a valuable part of the team. They're going to help you in terms of everything from planning to where you stand right now, taking the next step, all of that. If somebody wants to get a hold of you, Dawn.
Yeah, so I'm all over social media. So either Dawn Brolin, just Dawn Brolin on LinkedIn, Twitter, or X, or whatever it's called. I don't even know. Anywhere there. Dawn at powerfulaccounting.com is my email address. We have a whole process on how we onboard clients. We don't just take everybody. We know what's in our wheelhouse. We know what we can handle. But yeah, if you want any advice or anything like that, LinkedIn, all those places.
Yep. Nope. And I've had a number of accountants contact Dawn to consult with them.
Right.
Because they've been fascinated because they don't even know where to begin in terms of relationship pricing. Yeah,
and I do. I coach firms to help them move in the different direction, help them with technology, any of those types of things. I want everyone to win. I don't want all the clients, okay? I don't want all the clients, but what I want is all the clients to be served by someone, and that's what's important to me.
Wonderful.
Yep. And for an entrepreneur, you need a handle on your numbers. I mean, just to survive. But in terms of taking any of those next steps, whether it's funding, dealing with a bank, making decisions at year end, all of that stuff, you need a handle on your numbers.
Yeah, absolutely.
And it starts with the accountant.
It does.
All right. Any final thoughts?
Well, we generally ask our guests, what was their personal success tax with regard to from the time you started in business? And maybe we'll just say professionally, what cost have you paid to be as successful as you are?
I think for me, the biggest cost that I have invested in is my new accountant and tax preparer over the last few years, where I realized that I'm probably not the best person to handle my own books. And the only reason for that is because when you're done doing books for other people or doing taxes for other people, the last thing you want to do is your own. And I think that for me, I felt like, I'm going to let somebody else handle that and let them, handle that part of the thing. I think that was a big investment for me. And I think that at the end of the day, I get more deductions because she thinks of things I don't, because I'm not thinking about me, I'm thinking about my clients. So that's been a really successful move for me, is to take my own. I have a rental property. Come on, let's go. Rental property is where it's at, man.
Right.
Passive income.
Gotta have at least one.
Gotta have at least one.
Right.
I'm a designated motivator, so I do a lot of speaking, and so I have a business for that. And I also have my accounting firm, and I want somebody else to handle that for me so I can focus on my clients.
Awesome.
Yep. No, absolutely. It is amazing how you don't want to deal with your own stuff.
And you don't have to.
Yeah, no, it's my wife that finally like, can we get our estate planning done? I'm like, yeah, we really ought to do that. No, it is amazing how that happens. But listen, thank you for joining us. This has been great as always. And everyone, thank you for joining in for this week. And we're gonna have Dawn back because there's so many other topics we can do. And otherwise, thanks for joining us here at the Success Tax Podcast. We'll see you next week.